Hey everyone, welcome back to our latest breakdown on GameStop. Wow, what a wild ride we had yesterday. I know some of you might be feeling the sting after that big price dip. Man, it dug deep. We've been talking all week about this kind of scenario unfolding, and while it might look like a defeat at first glance, I'm here to tell you there's a lot to be excited about. That drop, it's got me looking up, not down, on this stock. And today I'll break down why. We'll also dive into our daily options analytics to get a sense of what might be coming in today's trading. So let's get into it. All right, let's talk about yesterday. That dip had me laughing at the memes. It was pure chaos. Wedbush came out swinging again with their analyst Michael Pachter, who's got to be the worst GameStop skeptic out there. Back in December, when we were trading around $30, he said GameStop shouldn't be at 3 times cash, pegging it at $11.50. Well, fast forward to April, when we hit $9.95, 3 times cash then, and it reversed hard to the upside. Now, with this $1.3 to $1.5 billion cash infusion coming, cash per share is looking like $13.70. So, Michael, how do you explain that? Is Wedbush tied to some financial interests skewing their take? I'm just asking questions here, but it's worth a thought. Here's the big takeaway from yesterday. Despite that brutal drop, GameStop didn't fall below a price-to-book value ratio of 2.0. We've seen this pattern all year. Every major dip, every low moment, institutions hold that line. Since last summer's equity raises and Roaring Kitty's return, it's been rock solid, except for maybe a couple hours during the kneecap crash. Yesterday, with 96 million shares traded, nearly a quarter of the free float, it was an onslaught of bearish pressure. Yet we closed at $21.16, reflecting a $4.775 billion cash value pre-offering, multiplied by 2. That 2.0 ratio held firm. That's huge. Why am I so pumped? This tells me the upcoming $1.3 to $1.5 billion cash boost, expected by April 1st, will lift that floor even higher. Do the math. Pre-offering, a $9.25 billion market cap divided by 2 matches their current cash. Add $1.3 billion conservatively, and even with 44 million new shares, the floor jumps to about $25.60. If no new shares are issued yet, it's closer to $27.65. Either way, we're looking at a new trading base between 25 and 27, way above those 15-18 swaps from 2023 that are drowning right now. With $40 billion in notional value expiring today, whoever's short is scrambling. This offering seals their fate unless something wild happens. And get this, that $4.75 billion they already have, stick it in treasuries, and it's earning hundreds of millions a year, cementing that floor. What if they take this new cash and go big, like into Bitcoin? Even if it tanks 50%, the floor only drops to $23.50. Shorts are toast either way. Plus, yesterday's action tied into senior note pricing between 1 and 4 p.m. Eastern. They pushed the price down to $21 early, then volume spiked to lock in a volume-weighted average price, landing the notes at $29.85 with a 37.5% premium. Redeemable only above $38.80 in 3 to 5 years. Smart move, GameStop. So, what's today look like? Options are wild. Premiums doubled in 2 days, IVs through the roof, and max pains at $24. The call wall's at $25 with puts piling up below. Expect volatility. Dealers might ride it up to $25, distribute calls, then let it drop. But if GameStop announces the offerings close today, boom, algorithms could pump us to 25 plus, sparking a gamma squeeze. No promises, but it's possible. We'll keep digging into this, the earnings, and today's action as things unfold. Thanks for tuning in. Stay safe out there, and catch you next time.